Let's start your investment journey.
Hi all and welcome to another edition of our weekly market outlook report for the week starting Monday the 8th of February. We have a quieter week ahead of us, which starts with slow calendar on Monday. On Tuesday we should be on the lookout for Chinese trade balance data for January. Going forward, China and also US consumer price index data for January, in addition to the weekly crude oil inventories, will be closely watched on Wednesday. On Thursday, the main economic data release is reserved for US jobless claims data. The week will finish on Friday with UK preliminary GDP figures for Q4, European industrial production and also US Michigan consumer sentiment for December. Now, let's take a look at few markets. Let's start with the German 30 or the DAX index, which had a bullish breakout higher. Key trade level going forward is at 13,990 or 14,000, which would be a nice and round number. Pullback to 14,000 and a rally higher, or a gradual move higher and a breakout above these current swing highs at 14,090. In particular, an end of day close and a breakout above these current swing highs here from January time at 14,130 would likely trigger a continuation of this bullish move higher, targeting additional resistance at 14,200, 14,300, 14,500. Take your pick. It's uncharted territory and very difficult to point to any logical resistance above that level. Alternatively, if we see a rally and a rejection or a gradual move lower and a loss of 14,000, a retest of that level from underneath as a newly found resistance, that could indicate a possibility of further corrective pullback lower, extension to the downside, targeting additional support at 13,920, followed by 13,860, 13,800 to the downside. Dow Jones, yet again, fairly severe selling pressure last week, massive selling pressure on Wednesday, corrective pullback on Thursday, Friday finished the day on the low. First trading day of February saw the market rally, and the market rallied for the rest of the week. The bullish scenario played out on Friday as well, which is triggered by US unemployment data as well, which showed much better number than the market consensus, although the non-farm payroll numbers disappointed. Now, key trading level for Dow Jones or the Wall Street Index is at 31,100. This appears to be a bullish consolidation. Breakout above these current swing highs at 31,200, 220, and an end of day close above that level could open the way for the continuation of this upward move, targeting additional resistance at 31,270, 31,300, 400, 500. Yet again, the same story. It's uncharted territory. We're breaking through all-time highs, and resistance to the upside could be very, very difficult to pinpoint. Alternatively, if we see a dip lower and an end of day close below this 31,100 area, a retest of that level from underneath as a newly found resistance, that could indicate a possibility of deeper correction to the downside, therefore extension to the downside and retest of additional support at 30,930, which is this current swing high here, followed by 30,800 to the downside. Euro dollar, we had an oversold bounce back. These levels down here towards one spot 1980, one spot 20 are significant swing highs from August time of last year. But the trend is still intact. It's downtrending here from the intraday point of view. Sequence of lower highs, the price is capped by falling trend line and also multiple moving averages. Key trading level for euro dollar is at one spot 21. Rally into 121 and a rejection, or a gradual move lower and a loss of these current lows at one spot 20, nice and round number, could open the way for a continuation of this selling pressure, targeting one spot 1980, one spot 1950, one spot 19 to the downside. Alternatively, US dollar weakness and a rally into 121. An end of day close above 121 could open the way for the short squeeze, potentially opening the way for the continuation to the upside, extension to the upside, targeting one spot 21.80, one spot 22, possibly even one spot 23. Sterling dollar appears to be more bullish. Uptrend is still intact. We had a corrective pullback lower and a massive rally higher. This was triggered by Bank of England interest rate decision, as expected, no change, but this bullishness was triggered by the central bank outlook and positive economic outlook going forward. Key trading level going forward for cable is at 136.80. Pullback to 136.80 and a rally is bullish, and also a gradual move higher and a breakout above 137.50. Retest of that level from above as a newly found support could open the way for the continuation of this upward move, extending it towards resistance at 138.50, 139, possibly even one spot 40. Alternatively, if we see a selling pressure, pushback lower and a loss of 136.85, an end of day close below that level, that could open the way for a possibility of corrective move to the downside, targeting this rising support trend line, multiple moving averages at one spot 36.30, one spot 35.70. Dollar Japanese yen, massive oversold, a rally higher, inverse head and shoulder here with a breakout. This is now a retest of daily resistance. This number of candles here, if you see them in end of day time frame, this is the 4 hourly, are pointing to a shooting star formation, which is indicative of profit taking. Key trading level going forward is at 105 to the downside. Rally from 105 and a breakout above 105.70 could open the way for the continuation of this upward move, targeting 105.90, 106, 106.50, 107 to the upside. Alternatively, if we see a dip lower and a loss of 105, retest of that level from underneath as a newly found resistance, that could open the way for a deeper corrective move and retest of additional support towards 104.70, possibly even 104.40. Lastly, let's talk about gold. This is gold in end of day time frame. This sideways consolidation continues. We saw a massive sell-off on Thursday and now oversold bounce back on Friday. Key trading level to the downside is at 1800. Key trading level on the upside is at 1820, 1826. A rally into 1826 and a rejection or a gradual move lower and a loss of 1800 to the downside. An end of day closing below that level could open the way for the continuation of this selling pressure, targeting additional support at 1775, 1760, possibly even 1754. Alternatively, if you see a rally and a breakout above 1826, that could create a short squeeze, potentially opening the way for an oversold bounce back higher, targeting additional resistance towards 1860, 1880 and 1900 to the upside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.
Let's start your investment journey.